Hi, everyone, and welcome to this session. I'm Mark from AVASK, and today we're going to discuss common questions and pain points from e-commerce sellers and even accountants when it comes to expanding your business globally and into Europe. I've experienced a lot of these pain points myself as a former entrepreneur and e-commerce seller. Today I'm joined by Angelos, founder and director of AVASK, and he's here to dissect and deep dive a bit more into these topics. And today we're especially going to talk about OSS.
Yeah.
So can you please tell us a bit more about OSS?
Yeah, of course. Thanks for being here today. I think it's one of the key critical points that a lot of entrepreneurs tend to be having as a core pain point, especially for those who are trading not only in the EU but those who are trying to expand over into the EU. So one-stop shop, in a few words, is basically it's an EU-wide system that is attempting to address the distance selling reporting of sales, and this is something that was introduced back in July 2021. That was replacing an older scheme whereby there were differentiated distance sales schemes per country. So now the one-stop shop simplified and integrated these into one global target for all the B2C distance sales across the EU.
Thank you for that overview and introduction, Angelos. But who is actually allowed to use OSS?
Yeah, so one-stop shop is I would say it can only be viewed if we see that from a perspective of EU and non-EU sellers. So for the EU sellers, in case they do have distance sales from one country to the next, they need to register for the one-stop shop VAT scheme. And this happens for those sellers who actually have those distance sales. If they do have only sales in their own country, they are not required to have this type of sales compliance filings. Instead, for the non-European sellers who may have facilitation of sales through marketplaces, then it means that they wouldn't have to be registered for one-stop shop because their marketplace would take care of this kind of reporting on a quarterly basis. However, if they do have any sales outside any marketplaces, like through their own website sales and by having a third-party logistics warehouse, then it means that they will need to have that filing and they will have to register in that case for one-stop shop. So it is, in simple terms, if we said that a US seller was coming to Europe and they were trading only via Amazon, they wouldn't have to have any one-stop shop registration or filings in that case because the distance sales would be taken care of via the marketplace. If they had any other sales, like for example, Shopify sales via their own warehouse that they would have, for example, in the Netherlands, in that case, they would have to declare those sales via one-stop shop when they would have distance sales. Plus, they would have to have their own VAT number since they would be having goods stored in the Netherlands. Whereas for the EU sellers, in any case, if they had their EU sales, meaning they would have distance sales, for example, a typical seller in Greece, for example, that they may have sales to Poland. If they were only selling in Greece, they wouldn't have to record any sales through one-stop shop. But because they would have sales in other EU countries, the arrival country being in that case Poland, will have to have that sale recorded as distance sale. And it's not as complex as it sounds. It's important to know basically where your arrival country is and whether you are an EU or non-EU seller in very broad terms.
No, I completely agree. It sounds very complicated, but when you break it down like that, it's actually
It's not as bad.
No, it's not that bad. But it's also very useful information for sellers and also accountants, because they come across these questions a lot from their sellers, expecting them to be able to answer these questions.
Correct. Yeah. And I think this is where we actually see most of the confusion coming, that seeing that in many cases, not only the business owners that may be seeing this as a kind of a blocker, but also for accountants not being a comprehensive policy framework for them. And how do they have to apply this in the day-to-day reality? And also, how do they declare the VAT in their own country? They may come and ask, what about revenue from other countries? What about the VAT from other countries? What do I have to include in my own country's VAT? What should I include in my in the distance sales reporting? And where do I actually have to process this type of sales?
Yeah, well, it's very useful information, this, I must say. And what kind of sales actually qualify for OSS?
Right. So this is really important, because this has to be very clear for every seller and also the accounting team. So primarily, it's all the B2C sales that are taking place for all the distance sales across the EU countries. Apart from any digital services, like, for example, any online subscriptions or streaming. The important part is that any B2B sales are not to be included in the distance selling reporting. Now, somebody may come up and say, you know what, I have sometimes B2B sales, but I'm not really certain if the VAT numbers of my partners, let's say, or my business clients in other countries, for example, may not be active or may not be valid. How should I treat those sales? In these cases, because a VAT number of a business in another EU country may not be active or valid, it means that that sale is effectively a B2C sale, because the VAT number that the business owns on the other end of the country, for example, doesn't qualify as a B2B transaction. So basically, in simple terms, the accountants and also the business owners should make sure that the VAT numbers of the businesses they work with, not only at the B2B level, but also customers that they could be VAT registered businesses, they should make sure that their VAT numbers are active and valid. And of course, it goes without saying that having this kind of knowledge is important, because the reporting of such information is critical for you to have that information. Now, you may say, where can I pull that information? So without blowing our own trumpet, in this case, as AVASK, we are able to assist you in terms of the generation of that report, and also we can support not only with those sales, but also with the VAT rates per sale that can take place from a B2C point of view across the 27. So it means that you don't have to be concerned that if I have to declare it on my quarterly or monthly report, like, where do I find those sales? What rate should I put? Is it a B2C? Is it a B2B? Like, what do I do afterwards? There's somebody who is going to be able to support you in terms of like how to distinguish and record those sales correctly.
A lot of useful information there, Angelos, for sure. And this is what we do at AVASK. We specialize in these kind of topics so that you don't have to. Like, you can rely on a service partner like us. So what if someone just sells through, for instance, marketplaces such as Amazon or eBay?
Mm-hmm.
Would that be any different?
Yeah. So I think in this case, having to, when you're selling via an online marketplace only, for example, like Amazon, I think the question is becoming a little bit simpler in this case, because starting from the non-European sellers, such sales will take place and will be recorded and declared via the marketplace. It is going to be something that the marketplace will be considered as the deemed supplier. In simple terms, the marketplace takes almost ownership of the declaration responsibility for those distant sales. So in this case, because the seller who is not based in the EU is not present in the marketplace in the 27 countries, so it's no longer required to have any such reporting. For those sellers who are EU based and they do trade via marketplaces, because they are based in the EU, they will have to record those sales in their quarterly one-stop shop VAT returns, because they are the deemed supplier in this case. So EU and marketplace sales, you have to report them on your one-stop shop. If it's non-EU and you have distant sales via marketplace only, it is the marketplace's responsibility.
Thank you for bringing clarity on that topic. Marketplaces is, as everyone knows, a huge thing today, and it's only growing. So that's very useful information, I must say. I think a lot of sellers would appreciate that, as well as accountants, of course, since they are helping out with all these things.
Definitely.
So, what if someone only sells in their home country?
Right. So in this case, provided that the seller is very much aware that they do have only local sales and their website sales recording systems, they do have this kind of clarity that there are no distant sales taking place, then they would not be required to actually to record those sales as distant sales, because these are going to be recorded in the local VAT return and the VAT frequency that is per country. So, for example, if I sell by my own country in Spain, for example, only, and I have to sell to make some sales to Spanish sellers who are based in Spain, in this case, I have to record that on the quarterly VAT return, and I don't have to declare anything else. If it was, if I were to exceed that threshold of 10,000 euros, because there is a 10,000 euro allowance for distant sales that the EU has given to sellers if they have beyond up to that threshold, then you're also able to include those sales within the local VAT return. So again, if I'm a Spanish seller and I have some distant sales to Denmark, to some Danish customers, and then some French customers or some German customers, and it is 8,000 euros a year, these sales will be declared in my VAT return in Spain without having to record those sales on one-stop shop. Again, if you also needed this type of support, AVASK is able to support you with this, because we're not only able to provide you with the cross-border sales, but also for the local sales, to be able to combine and validate sales that are taking place locally or at the cross-border level.
Sure. Thank you for that. And now that you explained who needs it and what it is, how do I actually sign up, and how do I register for this?
Right. Yes. So I think this is something that I would say, again, we need to distinguish between EU and non-EU sellers. So the first one is in terms of EU sellers, wherever the company is incorporated. Like, for example, if I have a German entity and I'm registered in Germany, I will have to visit the tax authorities, website, and then being able to go through the one-stop shop page and register there. It varies from country to country, because it can be, I would say between 2 to 4 weeks, more or less, the time frame. And once the VAT number is live, the declaration responsibilities start from the next quarter that you are in. If, for example, we are not in the EU, but you have to register for one-stop shop, then you will need to select a country where you would like to register all your distant sales. So my personal advice there is best to find like the most convenient and the easiest kind of portal or country that will be able to assist you. So again, we'll be able to provide you certain advice as to which countries would have a seamless and more like an easier and faster way to register in those cases.
Thank you. Sounds like a lot of you are gonna need this and benefit from this information. So once I am registered, I would assume that there's a lot of filing that you need to do and you need to report.
Mm-hmm.
How does that work, and on what frequency? How often do you do that?
Yeah, so there are fixed quarters per year, so they run on a fixed basis, like January, February, March is quarter one with 30 days allowance, to be able to file for that quarter. Then it's April, May, June, etc. every year. So these are fixed. And I would say the important part that you need to be very much aware of is that you need to have the VAT rates for all the arrival sales, and also you need to know, of course, the destination country where the sales took place. So again, this is going to be included within in the one-stop shop VAT return, and make sure that you distinguish between the B2C and the B2B sales. It's then you're able to not only to file, but you have also 30 days to make a payment, which is going to be for all the distant sales. Afterwards, the tax authority where you got registered will be able to distribute those funds to the other accounts according to the reporting that you would have actually processed on that file.
Okay, and with your answer here, you also touched a bit upon returns.
Mm-hmm.
So how would that work? What goes into OSS returns?
Yeah, so as we mentioned already, the focus of One Stop Shop is about distant sales, and it is about B2C distant sales. So with making sure that you have the VAT rates of all sales and the countries where they actually took place, then this information will be more than enough for you to be able to complete. I think the important part here is that if, for example, you have sales through different marketplaces, this adds another layer of complexity. So having this kind of reporting of all sales that are taking place and consolidating them into one report is very important, because distant sales are not only to be limited to Amazon. Let's say it's all distant sales that take place to all countries, to the other 26 if you're in the EU. And it's making sure that you distinguish which ones are to be on VAT with the correct VAT number, so that you don't find yourself having to overpay or having to underdeclare, and then you may have certain queries. But from experience, we see that a lot of tax authorities, they communicate with each other. So there are a lot of I would say cross-country reviews, whereby tax authorities may raise audits or audit queries on what information was actually filed, which come from marketplace information and data and sales. So I would say it's really important to have very clear record keeping in place, and have a very good understanding and grasp of what you declare at the local level and what you declare at the distant sales level. And again, if you have VAT numbers in other countries, such sales that are taking place locally will be declared in that country. So, for example, if we have a Spanish seller that they have VAT and goods in Germany and France, those sales that are taking place in Spain, Germany, and France will be declared in those specific countries with their VAT numbers that they have. For any other sales that are taking place from Spain to Italy, or from Germany to Denmark, or from France to Sweden, or from Spain to any other EU country, all these will have to be consolidated from Amazon, from other platforms and other website sales into one report, so that you can be able to file it on the respective quarterly stagger that is as per those rules.
Thank you for that answer. It certainly is interesting, and many of you out there, like, totally understand if it's a bit scary with all these rules and regulations when it comes to cross-border sales and stuff. So, what actually happens if you make a mistake on your returns here? Like, should you be scared, or like how can that be fixed, and what happens?
Yeah, I would say primarily, before we get to that point, as we said, we need to make sure that every reporting needs to be reviewed thoroughly, and you need to have very good record keeping. I think this is above everything, because you need to have very good understanding. In case, for example, it happens that you may have to make an adjustment, that can only take place on the next quarterly return. And I would say having to adjust a return, or like an incorrect VAT number that could impact 26 other countries, it can only be a nightmare. And it's not really advisable in many respects, even from the VAT filings in other countries, especially if you have to audit. So I would say just make sure that you know which country and which quarter it has to apply to, and then you'll be able to make that correction afterwards. Again, we would be able to advise you and guide you as to which kind of steps you have to take for this kind of perspective, in case it may be affecting multiple quarters. As, for example, we had some occasions whereby some sellers were not aware of having to register for one-stop shop for 3 or 4 quarters. So they had to bring all their account up to date, and we had to guide them as to how best they have to record all the sales, extract the local sales, and declare the B2C distant sales in this case, which can be quite complex, but it doesn't mean that it cannot be fulfilled.
No. And we're also here, as we said, to simplify these questions that you might have, and to make you feel safe when you're expanding internationally. And so we're here to guide you, advise you, and we have the expertise, as you can hear. Some of you might have also heard about something called IOSS. It sounds a bit similar, but what is the difference between OSS and IOSS?
Right, yes. So I would say IOSS is slightly different in terms of how OSS operates, and this has got to do more with probably individual sales that or of goods that you may have from outside Europe to individual consumers in the EU. For example, we tend to see those kind of reporting requirements taking place from sellers, whereby they may be having D2C shipments, or, for example, any individual sellers that they may want to have one-off shipments to any consumers in a specific country. This is IOSS is for any kind of imports that they go through the EU, and I would say it's mostly used when you want to ship any goods that come from marketplaces like, for example, I don't know, Shopify or similar, whereby you may have your stock overseas and you may have one-off requirements from a consumer in the EU. In this case, you have to register for IOSS, which means that it allows you to collect VAT at the checkout for goods that are valued under 150 euros. And I would say if you were to be having goods stored in the EU and you wanted to have more proximity to your consumer base, it makes more sense to register for VAT and have OSS for your distant sales. If you are not planning to be having a long-term presence in the EU for in different countries as well, the IOSS seems to be a better option for you because it has got a specific purpose, and it's more like a short-term solution in case you don't have a long-term plan for expanding into the EU. The only part is that if you were to register for IOSS, you will have to select the country again where you want to declare all your goods for the EU, but using that country as your registration country for all your one-off sales via IOSS.
Thank you for bringing clarity to those two terms. They might sound the same, but they're very different, as we heard here.
100%, yeah.
Yeah.
And I would say there was still a lot of confusion even from sellers that they may have VAT numbers, and we were receiving like queries like, although I'm VAT registered, should I also register for IOSS? So it was almost like a suggestion that since you already have the goods in the EU and you are within the space of the 27, it wouldn't be required for you to have any IOSS. But again, for some US sellers, for example, or Southeast Asian sellers that they may want to have one-off shipments, or they are testing the market, testing the waters, in certain countries, it may be a way to see where could be my target audience in some countries, and what if I want to expand further and then actually opt for a VAT registration in some countries there.
Okay. And going back to OSS, one-stop shop.
Yeah.
Is it mandatory, or can I just say, I don't want to do this, or it's not for me? Or does everyone have to do it?
So one-stop shop is as we said, is addressing all the distant sales, and the distant sales relate to those sales that they're targeting the arrival countries. With a previous status back in before July 2021, how the system used to work was basically you would have your goods in certain countries, and then if you were going beyond a certain selling threshold, which was between 35 or 100,000 euros, you would then have to register for VAT. This scheme seemed inefficient because it created a lot of a black hole in the European VAT space, with tens of billions owed per year or going unrecognized. So one-stop shop brought this cure of addressing those distant sales. So in case, for example, as a first step, as we said, there's an allowance of 10,000 euros for the EU-based sellers to declare those global distant sales in your local VAT return. But if you go beyond that threshold, you will have to register. Or if you forecast that it's it's February throughout in the year, and I'm already on 8,000 euros already, it is very obvious that you are forecasted that you're going to be expanding and breaching that kind of threshold of 10,000. It's what is important to consider is that you will all these distant sales, although they may go unrecognized in your own country, they will have to be recognized at the EU level, and other countries and other tax authorities from other EU countries will start inquiring with your country where you have your goods sent from. So Although you may think that, I don't have to register and record these kind of distance sales, but this will come as an inquiry to your own country's reporting schedules, because as there are sales that are taking place and intra-community report sales and EC sales, all these dispatches and acquisitions from one country to the next are actually recorded. And this is where there's another layer of auditing between the tax authorities and what is recorded on the VAT returns and at the one-stop shop VAT return. So in very few words, you should register for one-stop shop, provided that you are having distance sales. And based on, as we said, if you are EU or non-EU, and making sure that you have very good record-keeping systems to let you know about these type of requirements and thresholds.
Okay, but what if I'm an Amazon seller, for example? I have a VAT registration in one country, I do distance sales, but I also want to place inventory, for instance, in another EU country. What applies then?
Mm-hmm. Right. So in this case, you will have to register for VAT because wherever you're actually storing goods in the EU, you also have to have a VAT number. So one-stop shop applies to distance sales from one country to another, whereas if you have OSS doesn't cover inventory storage obligations. So in simple terms, if you want to hold stock in certain countries, you also need to have your VAT. If you are fulfilling goods from those countries to other EU countries, these are distance sales that they have to go under the one-stop shop. Again, with a caveat, if you are EU or non-EU, and based on the differentiation that we said. So in some cases, you may have your local VAT numbers, and you may have to have your one-stop shop for the cross-border sales.
I think we got very good answers here and explanations on this topic today. But finally, what are the risks? Say I don't include compliance and planning of this into my growth strategy. What are the risks? What am I facing if I don't take this seriously?
This is almost the situation whereby we may have not paid a lot of attention to the rules, or we may have misunderstood certain aspects of the policies. I would say the one-stop shop came into force as of the 1st of July 2021. And the rules are very clear that if if sales are not, or those distance sales are not recorded, there can be not only fines and penalties, but also the aspect of non-compliance on the account means that you may be removed from the account. In some cases, if you haven't even registered from that time frame and you had very good knowledge of the distance selling nature of your business, it may take you more than a year or more to be able to get registered. And the problem in this case is that not only you're going to have to bring your account up to date to that point, but in the meantime, you're going to have to register for VAT to all those countries that you are distance selling until the time that you're able to apply. So, for example, if again I'm a seller that is based in Spain and I have sales in other 10 EU countries and I'm not registered for one-stop shop, I need to go and register in all those 10 other EU countries that I do have distance sales in those arrival countries, and with delays and the cost that you have in these circumstances, because registering and maintaining VAT numbers in all these countries is what the one-stop shop regulation is trying to actually remedy and give us more like of a simplified way of maintaining those types of reporting requirements, basically.
Yeah.
So yeah.
Thank you so much for explaining this and going in depth on this topic of OSS and elaborating a bit more. Know there are a lot of regulations and a lot of things that e-commerce sellers need to listen to, and we tend to hear that they go to their accountants for advice, because like that's the natural thing to ask the person who handles your finances.
Yeah.
But we see a gap there, that there might be questions unanswered, and like what can AVASK do, or like how can we help accountants, let's say, with these kind of questions that we know that they're getting in larger volume now that e-commerce is expanding and cross-border sales are expanding. So what can we do for them?
I would say both accountants and business owners need to work as a team. So both of those units, both the business side and the finance side, they always need to work together and on the same direction. In some respects, we have noted that some business owners may have not spent enough time to explain to the finance teams, like, what does it mean to trade online? And why is it important to consider expansion internationally? On the other hand, finance teams may not have this as a priority as such, or they may have not had enough time to absorb and digest this type of information and that sector and spectrum, because for them, the focus is more about making sure the company is compliant and is up to date with their numbers. So I would say my biggest kind of proposition in this case is to make sure that the business side of the business side of every e-commerce storefront, I would say, is important to promote their finance teams to go to seminars to educate themselves on how to learn more about e-commerce, to expand on the understanding of the market and on how to treat those new regulations, register for conferences that talk about e-commerce, accounting, or even how to treat cross-border sales. From our side, as AVASK, we are a team of more than 300 experts, and we have presence in 11 countries. We may not be present in your country, for example, but we do have a number of advisors that could be able to spend time with you whilst we are actually training your teams and being able to spend time with yourselves from a business point of view, but also from a technical, from cross-border and technical and accounting point of view on how you need to treat certain distance sales and any revenue and turnover from other countries for your own business and then for your own in your own country. But overall, I would say the important part is for both the leadership of an e-commerce store to be a little bit more patient and give a little bit of breathing space to the finance teams to be educated a little bit more, and we're here to help. On the other hand, the accountancy teams, the finance departments of e-commerce stores would need to go beyond that fear of not progressing with those regulations, allow time to digest and ask those questions, and not being more that cautious on the perspective of pushing back the business to progress and expand internationally. Because again, if we focus on one country, each country, like for example, being based in the Netherlands, the Dutch market is up to 16 million. If we were to be expanding to the whole of the EU, we're having a potential spectrum of close to half a billion population with also all eyes from many other continents. And again, if we have physical stores, in some cases, making our physical stores visible online, it expands the potential and the global outreach and scope of a business. And in some cases, some businesses may have a certain focus on the local audience and the local and the country they are in, but we do not know what has the expansion to offer. And in most cases, it bears the dividends rather than the cash flow for the business as such, which is more important now talking to the entrepreneurs out there, that although you may have your cash flow generated in your own country, expansion can bring dividends to yourselves and to the businesses you're running.
Thank you very much, Angelos, and thank you so much for joining me here today and bringing clarity to this topic, OSS in particular. We have more for you, but that was it for this session, and we hope that you join us soon again.